Hello and welcome to another MCO update on DOT. The Polkadot chart is currently moving in a sideways consolidation. We could call that maybe a bit of a pennant there. We're holding support, so I don't trust this triangle. I mean, that might morph into something different, but for now it looks like a triangle. Still tracking this white scenario as preferred interpretation. And we are watching for potentially one more high to complete a 5-wave pattern to the upside from the April low. At the moment, we have a 3-wave move up, and another 4-5 pattern would give us a solid 5-wave move to the upside, with next upside levels at $4.51 and $4.63. Of course, further upside extensions are possible. These are simply the next levels to watch. On the nanostructures, there is likely going to be some, I would say, more substantial resistance in the area around $4.75, $4.80. That's where the 200% extension level is as well. So I'm watching here for a potential, as I said, 5-wave move up in a diagonal pattern. And if we zoom in a little bit, go to the 1-hour time frame, you see the microstructure of this triangle that I am tracking. Third wave might have topped here on Friday the 25th. And the triangle is an ABCDE pattern. So the A wave element could have bottomed there on the 28th of April. The B wave might have topped there around the 29th. C wave down, bottomed on the 30th. D wave up, now unfolding. E wave down would be next. And that's just at the moment a pattern we can track, which is forming a series of higher lows and lower highs. And the first breakout point to the upside, that's the B wave high. I mean, once we have a top in the D wave and we go down a little bit, the D wave high will become a relevant level, so a potential breakout point. But at the moment, it is this B wave high at around $4.35. That means, in other words, as long as we're holding above Fibonacci support, which is here $3.79 to $4.01, I'm going to watch for one more high. The triangle is valid technically as long as the market holds above the A wave low. They're at $4. As long as we're holding $4, the triangle is alive and preferred, and the break above 434 should send us at least to 451. Better 463, maybe even 479 if the market is very bullish and aggressive. So yeah, I mean, we can track as an alternative scenario the yellow count. That would be slightly different structure. It's overall, we could say it's the same scenario, right? That a more substantial low formed there in April. But the question is always with these corrective rallies, is it a 5-wave move up, this A wave? Or is it a 3-wave move up? And for now, we can label that as 3 waves up, but it doesn't look finished yet because the pullbacks remain corrective. So for now, I keep the door open for higher, for in at least one more high. First signal that a top of sorts is in place would obviously be a break below that $4 level, the 28th of April low. But then at least we have the next Fibonacci area to watch there. And how is that all, let's say, part of the bigger picture? Just want to briefly show you the long-term chart as well, so you get a good understanding of where we are. And you can see here that the idea is that we are moving up in a corrective rally. The only question is the A wave a 3-wave move, or is it going to turn into a 5-wave pattern? So we should get some clarity over the coming days. Standard resistance here on the larger time frame is between $5.31 and $8.84. Yeah, and $5.31, this is where resistance actually starts. That's the update on DOT. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.